Hello, Coach Cory here, financial coach with Financial Journeys. I'm still thinking about credit cards. Now, we covered the credit card shuffle on how to help pay down credit cards, but I wanted to go over exactly what credit cards are and how they work. Having a full understanding of how credit cards work, what they can do for you, what they provide, and what they cost will definitely help you keep control of your credit card spending and control your debt. So now, why do people have credit cards? There are many things that you get from credit cards, starting with, of course, the short-term loan that you get by using credit cards when you don't have the money. You can get rewards from the cards, and you also get purchase protection. They provide a certain amount of security when you use them. There are several different types of credit cards, everything from the general purpose Visa, MasterCard, and Discover cards that you get to store credit cards that are for use only within certain retail establishments. And also there are secured cards and student cards that help you establish your credit and move on to the big kid cards. Starting with the private cards, they tend to be only for use in individual retail establishments like Macy's, JCPenney's, Nordstrom's. A lot of these big department stores have their own cards, but they tend to have lower limits and higher interest rates. General purpose cards are allowed for use anywhere. You can use them at any retail establishment, you can use them online, PayPal, Square, any kind of transaction. They have higher limits based on your credit score and interest rates that tend to be lower than the retail cards, again, based on your credit score. When you have low credit or no credit, that's when you can get student cards or secured cards. These cards usually require a deposit, $200 to $500 that you deposit into an account, and then that sets your limit. You make payments on those to ensure building your credit, and then eventually you can move from a secured or student card to a general purpose or retail card. All credit cards have various fees that go along with them. Everything from annual fees for membership to interest rates, late payment fees, transfer fees, and foreign transaction fees. The annual fees are usually a small amount, many times in the area of $100, just for access to the card. That could get you some type of rewards program, maybe lower interest rates, benefits, various things that the card provides to you. The interest rates, that's just standard with credit cards. Interest rates tend to run anywhere from about 10% up to 22%, depending on the card you're getting, the rewards program and benefits they provide, and your credit rating. There are also fees such as balance transfer fees, moving balances from one card to another. There are cash withdrawal fees when you take your credit card, say, to an ATM or bank and pull cash against it. Then you pay a cash withdrawal fee as well as interest rate on that amount. There are over limit fees for when your spending exceeds the limit that's set for your credit card. And then there's late payment fees. These late payment fees are a double whammy. They not only hit you for a fee when you're late, but it can also cause your interest rate to go higher. The big one is interest. Credit card interest rates running from 10 to 22%. If you allow your credit card to carry a balance, this is the one that's really going to punch you in the wallet. According to a study by WalletHub.com, the average interest rate for newly issued credit cards is approximately 18%. So we'll use an example. Let's say you have to replace your wardrobe for work, or you have a vehicle expense you need to repair because something broke on your car, and you run up $1,000 on your credit card. Now when the bill comes, the way credit card payments are set up is it's usually 1% of the outstanding balance plus the interest rate you've earned for the month, or $25, whichever is greater. Now on this $1,000 expense, the $25 is going to be the greater of the two. So you make your $25 payment. If you continue with the minimum payment until this $1,000 is paid off, it's going to take you 112 months to pay off this expense. That's close to 10 years. And you'll have paid $1,920.96 for this $1,000 expense. Now, credit card companies are expecting you to continue using your card, and thereby making it impossible to pay off if all you're paying is the minimum payment. Now, as you look at all of these credit card fees, every single one of them is avoidable. Now, the easiest way is, of course, don't use credit cards. But for some people, that's just not a reality. So we'll look at these fees and how to avoid them. First of all, the annual fee, the membership. There are a lot of cards that do not have an annual fee. These cards may have a higher interest rate, but we'll talk about how to avoid that too. So if you use your credit cards, the easiest way to avoid the interest rate is to just pay it off every month. Only use what you know you have in the bank to cover. Now, the easiest way to avoid the interest if you're going to use the credit card is, of course, to pay off your balance every month. Only use the credit card to the extent that you know you have the money in the bank to cover it, and pay it off immediately. Now, if you're doing this and only using what you have, you'll never have to do a balance transfer, and so you avoid the balance transfer fees. Never using a cash withdrawal, because you usually pay about 5% as a fee for that, and then you've got interest to pay. So it's better to borrow from a parent if you have to, or sell something, maybe get a side gig to spin up some fast cash. That's a lot better than doing a cash withdrawal on a credit card. Now, with all of these fees, why would you even have a credit card? There are a lot of things that credit cards do provide you in the way of protections and benefits. Some of these protections include that businesses that take credit cards, they sign an agreement with the credit card company that they're going to. Some of the protections that are included with your credit card are that the vendors that take credit cards, they sign an agreement with the credit card company that they're going to do business in an ethical and responsible way. So that ensures that you, the customer, are doing business with a good company. As an example, in the past, I went to a mechanic and I told them, my car's not worth a whole lot. So I want to know right up front everything that's wrong with it. Let's run all the diagnostics and figure it out, find out if it's worth repairing. Now, they came back with one problem. They said, hey, if you fix this, you'll be good to go. I said, great, let's do it. That's not a lot of money. It's worth it. Then I got another call. Well, we started that repair and we found another. We wound up with a long list of repairs being required, which I never would have started if I had seen them all from the beginning. I went to pick up my car and have it towed away, and when they gave me the report, there was about 15 discrepancies, most of which they hadn't even told me about yet, listed on the form. I immediately contacted my credit card company. I told them the details of how I'd taken the car to the mechanic and the explanation given and how things worked out. The credit card company wound up refunding me all of the money for the repairs. So these protections can be very beneficial. Fraud protections with credit cards are generally greater than those with debit cards. They're similar, but greater with a credit card. If you were to have your identity stolen or your credit card number stolen, you can wind up only being liable for $50 of everything that's done, rather than a portion of every purchase that may be part of your liability with a debit card. Credit card bonus programs are definitely a good incentive, whether it's cash back or miles or other bonuses that you receive for being a card holder. These can be a great incentive of having a credit card. But no one ever got rich off of credit card incentives. So make sure you manage your card usage so that the incentives are a bonus and not just making it less of a penalty by using the card. A retail outlet may have a 30-day return policy. But if you check your credit card terms and conditions, they may have an extended return policy that's allowed if you use their card for the transaction. So if you get just beyond that period, take that information with you when you take your purchase back to your retailer. You may be able to get the return at full price, outside of the retailer's return window. And then finally, credit cards improve your credit rating. That will help you in the area of car purchases, home purchases, and other large financing items. Credit cards can be a great tool in your financial strategy if used properly. So always be sure you know what you're getting into when you get a credit card. Always read the terms and conditions and make sure they fit within your financial strategy and they won't be a hindrance. Thanks for watching today. Check out some of the other videos on my channel for more budgeting information and tips. If you liked this video, give me a like down below and follow my channel to get all the updates right away. Thanks.